Cryptocurrency has redefined how we think about money, value, and technology. What started with Bitcoin in 2009 has now grown into a trillion-dollar ecosystem that's revolutionizing industries and reshaping global finance. At the forefront of this revolution are two giants, Bitcoin and Ethereum. Bitcoin, often hailed as digital gold, is the original cryptocurrency, a decentralized store of value that has stood the test of time. Ethereum, on the other hand, is the pioneer of smart contracts and decentralized applications, driving the innovation behind Web3. As we look ahead to 2025, investors, analysts, and enthusiasts alike are asking the same question: which is the better investment? To answer that, we'll dive deeply into their histories, strengths, challenges, real-world applications, and future possibilities. Part 1. The birth of Bitcoin. Let's start with Bitcoin, the cryptocurrency that started it all. Bitcoin was created in 2009 by a mysterious figure known as Satoshi Nakamoto, whose true identity remains unknown. It emerged in the aftermath of the 2008 financial crisis, a time when trust in traditional financial institutions had been shattered. Banks had failed. Millions had lost their savings. Governments had printed trillions of dollars to bail out financial institutions, leading to fears of inflation and economic instability. In this chaotic environment, Bitcoin was introduced as an alternative. 1. A decentralized currency that operated without the need for banks or governments. 1. A peer-to-peer payment system that enabled anyone in the world to send money directly to anyone else. 1. A digital asset with a fixed supply, immune to inflationary policies. At the core of Bitcoin's innovation was its underlying technology, the blockchain. Understanding blockchain technology. What is a blockchain? At its simplest, it's a digital ledger, a record of transactions that is distributed across thousands of computers or nodes around the world. Every transaction is verified by these nodes using cryptographic algorithms, making the blockchain secure, transparent, and tamper-proof. Unlike traditional ledgers, which are controlled by banks or governments, Bitcoin's blockchain is decentralized. No single entity owns it, and no one can alter its records. This decentralization is the key to Bitcoin's success. It ensures that Bitcoin remains 1. Trustless. You don't need to trust a bank or intermediary. 1. Secure. Thousands of nodes verify every transaction, making fraud nearly impossible. 1. Transparent. Anyone can view the Bitcoin ledger in real time. Bitcoin's unique features, fixed supply Bitcoin has a hard cap of 21 million coins, a feature embedded in its code. This scarcity makes Bitcoin a deflationary asset, one that becomes more valuable over time as demand increases. Decentralization. Unlike fiat currencies, which are controlled by central banks, Bitcoin operates on a decentralized network. This makes it resistant to censorship, manipulation, and inflationary policies. Immutability. Once a transaction is recorded on the blockchain, it cannot be altered. This immutability guarantees the integrity of Bitcoin's ledger. Bitcoin's halving and its price dynamics. Bitcoin's supply is further limited by a process called the halving, which occurs approximately every 4 years. During a halving, the rewards given to Bitcoin miners for validating transactions are cut in half. This reduces the rate at which new Bitcoins are created, increasing scarcity. Historically, halvings have been followed by significant price increases. 1. After the 2012 halving, Bitcoin's price rose from $12 to over $1,100. 1. After the 2016 halving, it surged from $650 to nearly $20,000. 1. Following the 2020 halving, Bitcoin reached an all-time high of $69,000 in 2021. The next halving is scheduled for 2024, and many analysts believe that 2025 could see another bull run. But while Bitcoin's scarcity makes it an excellent store of value, Ethereum's strength lies in its ability to innovate. Part 2. The rise of Ethereum. Ethereum was launched in 2015 by a young programmer named Vitalik Buterin and a team of developers. Unlike Bitcoin, which was designed primarily as a digital currency, Ethereum was built as a platform for decentralized applications, or dApps. At the heart of Ethereum's innovation is the concept of smart contracts. What are smart contracts? Smart contracts are self-executing agreements where the terms are written into code. They automatically enforce themselves when specific conditions are met, eliminating the need for intermediaries. For example, 1. Imagine you're renting an apartment. 1. A smart contract could release your security deposit back to you once you return the keys and pay your final bill. 1. No need for landlords, escrow accounts, or legal disputes. The contract enforces itself. Ethereum's expanding ecosystem. Ethereum's programmability has made it the foundation for countless innovations, including decentralized finance, DeFi, platforms like Aave, Compound, and Uniswap allow users to borrow, lend, and trade without relying on traditional banks. Non-fungible tokens, NFTs. Ethereum powers the NFT market, enabling artists, musicians, and creators to tokenize their work and sell it directly to fans. Decentralized Autonomous Organizations, DAOs, are organizations governed by smart contracts rather than traditional hierarchies. They enable communities to fund and manage projects collectively. Web3 Ethereum is at the forefront of Web3, the decentralized internet. Unlike today's internet, which is dominated by tech giants, Web3 aims to return control to users. Ethereum's transition to proof-of-stake in 2022, Ethereum underwent a monumental upgrade called the Merge, transitioning from proof-of-work to proof-of-stake. This upgrade brought several benefits. Energy efficiency proof-of-stake reduced Ethereum's energy consumption by over 99%, addressing environmental concerns. Scalability, the new system lays the groundwork for future upgrades, like sharding, which will increase Ethereum's transaction capacity. Staking rewards investors can now earn passive income by staking their Ethereum to secure the network. Part 3. Comparing Bitcoin and Ethereum. Let's take a closer look at how these two giants stack up. Purpose. 1. Bitcoin is a store of value designed to be digital gold. 1. Ethereum is a platform for innovation, enabling decentralized applications and smart contracts. Technology. 1. Bitcoin's blockchain is simple, secure, and robust, using proof of work. 1. Ethereum's blockchain is programmable and versatile, with proof-of-stake driving its evolution. Adoption. 1. Bitcoin is favored by institutions, with companies and even countries adopting it as a reserve asset. 1. Ethereum powers industries like DeFi, NFTs, and Web3, making it a cornerstone of the digital economy. Investment characteristics. 1. Bitcoin offers stability and a hedge against inflation. 1. Ethereum provides exposure to growth and innovation. Part 4. Challenges and risks. While both Bitcoin and Ethereum have immense potential, they also face challenges. Bitcoin's challenges. 1. Energy consumption. Bitcoin's proof-of-work system requires vast amounts of energy. 1. Regulation. Governments could impose restrictions on its use. 1. Scalability. Bitcoin's transaction capacity is limited, making it less practical for everyday payments. Ethereum's challenges. 1. Competition. Rival blockchains like Solana and Cardano offer faster and cheaper solutions. 1. Execution risks. Ethereum's roadmap for scalability is ambitious and could face delays. Part 5. Future scenarios for 2025 and beyond. Let's imagine what the future might hold for Bitcoin and Ethereum. Bitcoin as a global reserve asset. 1. More institutions and nations adopt Bitcoin as a hedge against inflation. 1. Central banks begin holding Bitcoin alongside gold. Ethereum dominates Web3. 1. Ethereum becomes the backbone of the decentralized internet, powering everything from finance to healthcare, regulatory clarity. 1. Governments establish clear rules for cryptocurrencies, paving the way for broader adoption. Technological breakthroughs. 1. New upgrades make both Bitcoin and Ethereum more efficient, scalable, and secure. Final thoughts. Bitcoin and Ethereum represent two distinct visions for the future of finance and technology. Bitcoin offers stability, security, and scarcity, a digital fortress in uncertain times. Ethereum delivers innovation, versatility, and growth, a dynamic platform for building the future. The question isn't which one is better, it's which one aligns with your goals as an investor. As we approach 2025, one thing is clear. Both Bitcoin and Ethereum will continue to shape the world of cryptocurrency, offering opportunities for those who are ready to embrace the future. Are you ready to take the leap?